Facebook stock is an easy double from here. Everybody's negative on the stock. We see this article out today. Facebook scrambled to escape stock's death spiral as users flee and sales drop. Okay, I own Facebook stock. I'm building a portfolio right here. I do it transparently. If you've watched my videos, you see my portfolio. I share it all the time. I have $8,000 invested in Meta right now, and I think it's an easy double from here. I'm not going to sell my shares. If anything, I'm going to be buying more shares. So just subscribe to the channel if you want to see what I do with the portfolio. Let's talk about this article a little bit and why now I think is like the best time to be buying into shares of Meta. And I'm going to talk about why I think the stock is an easy double from here. And I have no intention of selling my shares. And I think it could actually be one of the best performing stocks over the next decade or so. All right, so here's the key points to this article. Meta is trading at its lowest since early 2019, and the stock is one of the worst performers this year. Okay, this is a reason to think about buying a stock if the fundamentals are there, if the business is still good, not a reason to sell, right? But it's cited in this negative article that just tells you how negative the sentiment is, okay? Stock is one of the worst performers. Okay, I like to go for outperformers and stocks that are beating the S&P 500. Generally, stocks that underperform continue to underperform. But once in a while, when you have a great business that's going through a very tough phase or a transition that other people don't want to wait for and don't understand, I think that's what's happening with Meta, you can get great opportunities when they're underperforming. The company's problems are mounting, whether it's the ad hit from Apple's iOS changes and the growing threat posed by TikTok. Let's talk about this. This is affecting everybody, right? And it is now behind them. They, in my opinion, are in the best position out of anybody to adapt to this and overcome it because they have something like 3 billion people in the world that use their services. They have multiple services with over 1 billion people using them. They know how to grow these services, and they're investing heavily into the metaverse and AR. And if they did it with social before everybody else did it with social, they can grow AR and VR, whether that is for consumer or for the enterprise and the business or for education. There is a huge market out there for the metaverse, for AR, for VR. We don't see it yet. It doesn't have mass adoption yet, but that's how those new technologies work. It's undervalued at first, underappreciated. Nobody likes it. You can't see how it's going to scale. And then all of a sudden it clicks and then there's mass adoption. That, I think, is what's going to happen. And Meta has the budget and the expertise and the long-term vision and Mark Zuckerberg to actually accomplish that, whereas other people don't, especially in this type of economy when companies are dying. Facebook, Meta, they're not dying. They have tons of cash. They're doing just fine. The company's not going anywhere. I'm not sure there's a core business that works anymore at Facebook, said Laura Martin, an analyst at Needham. This is exactly what I want to see when I'm heavily invested in a business. Everyone hates it. I want to be there. All right, so enough about the article, right? And again, here's a portfolio. We're at $93,996. We're up $1,300 today, 1.5%. Hope you're having a good week. In total, we've put in $104,500 and we're down about $10,000. So we're actually up 1.62% today. Here's the positions. Just take a look, take a screenshot, do whatever you want, look at it. Okay. Why do I think Meta is such a great opportunity, not just from the negativity in all these articles and stuff, but from the actual fundamentals, the actual business? What we're looking at here is just a graph that shows the price to earnings multiple. This is the average multiple of the stock over the life of the stock. And this is where it is today. We see it is just so far below where it's historically traded, okay? Okay, we jumped to the estimates page. What this page shows is analyst estimates out through 2024 for earnings per share. We have it growing to $12.98 in earnings per share. That's 12% growth in 2023, 17% growth in 2024. And then I put 8% growth for the next 3 years, getting us to $16.35 in earnings per share by 2027. If we go from today's price at a PE of 12.57, a blended PE of 12.57, to a blended PE of 12 in 2027, you get a total of a 43% return. If we get to a PE of 16.5, again, this is with these growth estimates, which I think are actually conservative, 8% growth of estimates. If we get to a PE of 16.5 in 2027, which about average with the S&P 500, okay, then you have your 100% return. You're double from here by 2027 for 13.8% annualized. In my opinion, I own the stock. This is my opinion, how I'm thinking about it. I think this is conservative, and Facebook, Meta has the potential to do a lot better than that. Okay, let's look at what analysts are expecting here. We're going to build out a little model right here in Everything Money, we're going to do a 5-year model, a low, a medium, and a high scenario. I've got 8% revenue growth, 11, and then 15%. Where am I getting that from? Again, these are the revenue expectations that analysts have through 2026. 11% essentially compound annual growth rate, right? Okay, then we need the net income margin. How much income are they generating, and what is the margin of that compared to their revenue, right? The percentage compared to the revenue. That's the net income margin. Okay, $42.7 billion in net income by 2026 for about a 24% net income margin. And then we need free cash flow. They think they're going to generate $74.6 billion in free cash flow in 2026 for a 42% free cash flow margin, okay, with gross margins right around 78%. All right, so we go into here and we build this out, right? 8% revenue growth, low, 11% medium, 15% high. Profit margins, again, we got that from analyst expectations, 24%, give or take, who knows? Maybe it's 22, maybe it's 26, who knows? Free cash flow margin, 40%, again, give or take 10% either way. And then a scenario where the PE on the low side is 11, the PE on the middle side is 14, and a PE on the high side 16. Price to free cash flow, 10, 13, and 15, and we're looking for at least a 10% annualized return. I'm gonna hit analyze, it's gonna give me a low, a medium, and a high buy price of where I would buy shares right now if I want at least a 10% return over the next 5 years for these 3 scenarios. So we hit analyze, and this is what we have. Stock price is currently $138. Okay, low scenario, you would be willing to pay $156 a share. Medium scenario, $209 a share. High scenario, $278 a share, or $271 a share. I think all 3 of these scenarios are possible. The most probable is probably something in the mid-range, right? I don't think the low is the most probable, and I don't think the high is the most probable. I think most probable is somewhere in the mid-range. The stock still has risks. They are making a big investment in AR and VR. That might not work out. I think it's going to work out. And so I think long-term, Meta is going to do just fine. I own shares, and I'm going to continue to own shares. Let me know what you think in the comments.